Good morning, everyone. Happy Saturday. Um, Welcome to Trick or Trade webinar. This goal is to make trading less spooky with automation and other things that I'm going to discuss. So this webinar is going to last for about 90 minutes, if not more. So grab a beverage, grab pen and paper or any note-taking device because I'll be sharing some good stuff. Or just be ready to take screenshots, whichever one you like, and use it for your trading. Whether you are new trader, experienced traders, doesn't matter. There will be something for everyone in this webinar. So welcome. Before I proceed, there's a statutory disclaimer that this is not a financial advice. This is just our point of view on a possible business model using trading. So there's no guarantee of returns. Individual performances vary. So this webinar is mainly about Sliver Bullet trading system, a path to financial freedom, and how we will show you. And I'm Rao, founder and architect of founder of Sliver Trades and architect of Sliver Bullet trading system. This we developed basically to help traders achieve emotion-free trading results. We are a Chicago-based company, and there are three parts to this presentation. The first, the education. We'll talk about the business model, and then the software, then the funding, and finally, we'll help you decide whether this system is the right one for you or not. Of course, we'll show you the offer in the end and the discounts that we are offering now, all that stuff. So, but before I get started, I want to start with a kind of a demo, what we are talking about. Before I, get into all the nuts and bolts, the theory behind it and all that, I just want to give you a demo of the software that is an important element of this whole system. And here I'm going to trade the financial instrument NQ, is basically futures instrument, and I have a particular type of chart open on the screen, which gives us a better understanding of the price trend or the direction of the trend. And here, I always, in these webinars, I show a demo with the previous day's data. That's so yesterday was October 25th, Friday, and market I start from market open. 8:30 Central is when the market opens, and I want to give you a quick demo of this software just to give you an idea of what fundamentally we are talking about, and then I will provide other details eventually. So here, this is the software, a Sliver Bullet Pro, which is part of Sliver Bullet trading system. And there are different settings here, like ATM 1, ATM 2, ATM 3. These are basically automated trade management settings. They take trades using different number of contracts, ATM 1 with one contract, 2 with 2 contracts, 3 with 3 contracts, and things like that. And before going into any details, I will just set the parameters, max loss parameter of 2,500 and profit target of $2,000 for the session. And I will enable the software, and you see software load. This is the user interface of the software on the top, and these are different buttons. I click on ATM 2, which will take trades with 2 contracts, and then long off. These are automated long off buttons, and these are different strategy buttons. So I'm going to use this and one of these, and then other buttons that I will go into later in the presentation. So So let me get started here. I will turn the timer on. This will use the playback data, means yesterday's data in playback mode. And I see that market has opened here. Here is the market open. Let me make the screen bigger. And its market has opened above previous day's close. Like this is Thursday's close, and this is where the market opened, and market is trending upwards, is angled upwards. So what I'm going to do is I'm going to take a long trade and trend trades, and these are the buttons I normally keep them on. They have certain there's certain features to it. So here you see that software has taken a trade with 2 contracts because ATM2, and it has 2 target levels, one for each contract, and there is a stop here in the way down here. So I will let the software. Reason I'm taking long trade is because market seems to be uptrending, and it opened above yesterday's close. And these are the education. This part of the education that we provide to our members. But for now, just I'm going to take long trades and show you what's happening. So target filled, if you have heard, that means one contract closed. So here, actually, while we were talking, second trade also happened. So 2 trades were taken by the software automatically, and first trade made $131, second one made $131 again. So total is $263 from 2 trades. So I will let it run. In fact, I can increase the speed of the playback, so we get trades faster.
Target filled, order, target filled, order, target filled, target filled.
So if you notice here, there was a scaling also, like when market goes against your current position, an extra trade is taken, and existing trade is taken out at break-even price. Means one trade, it will try to make a loss, and other trade make a profit. So if you see some red numbers, $23, $53, means those are break-even trades. They went for loss, and so basically, software has inbuilt mechanism to salvage a troubled position. So automatically that happens. Here.
Filled. Target filled, or target filled.
So market continues to trend upwards, and software is taking trades continuously.
Target filled, target filled.
So here you see so far $761 from 7 trades. Though 3 trades were lost because of the break-even nature of this, software. If one position goes against it, it will try to average itself out of the position. So that's why you see one positive, one negative, so that it gets cancelled, and we get a break-even result. So it tries to keep you safe, basically.
Order filled. Target filled.
So now we stand at like $1,400, and it will stop automatically once profit level has reached to 2,000, because that's the parameter I had entered. There were possible short trades, but those short trades were not taken because I did not turn the short button on. So otherwise here there could have been short trades also, but I did not do it because market is uptrending, and I did not want to trade against the trend.
Order filled, target filled.
So again, one break-even trade.
Filled. Order filled.
I see market going sideways, maybe.
Target filled.
I'm going to increase the speed.
Target filled. Order filled. Target filled.
Now, so now it has reached $2,000 and trading has stopped. It says here in the messages, total profit target reached, and on the top you see trade button disabled. So whatever session profit or loss we set, once the software reaches that level, it will stop. So I want you to remember this result, $2,000 it made. And how long did it take? Market opened at 8:30 and it's 8:47 a.m. So in about 17 minutes, software helped us make $2,000. Again, so this is just to demonstrate the software. We do not aim for $2,000 per day. It's possible to make, but we do not aim for it because this may not happen every day. Maybe 4 days it will happen, one day it will not happen, and one day's loss will take away maybe 3 days or 4 days of gains. So that's why we don't trade blindly or indiscriminately. Even with this automated software, we apply certain rules and theory or understanding of the market, and that's what we kind of teach in our trading program. Now, coming back to the presentation, why all this? Why we want to do trading or anything? That's because of the very basic human need of financial freedom. We all desire financial freedom, which we define as the desire for decision making without financial constraints. We want to have freedom to travel, own a home, and pursue our passions. And we believe trading could help achieve that financial freedom. And this financial freedom is exemplified by the picture on the left, where a person is laying on the beach with a laptop and probably trading, which means he has the freedom to be anywhere in the world and be able to do trading and earn his living or even build his wealth. And once he's done, he should be able to go ahead and pursue his other passions. And the goal of this presentation is to show you just how by spending only 1 hour a day, one trading hour, you can have enough money. It could be side income or even a living, and make enough money to pursue other things and do whatever you want with the rest of the day, rest of your time. So before doing all that, we need to understand trading, and especially any endeavor in my mind should be treated like a business. Trading is no exception. And if we want to look at trading as business, what all things we need to keep in mind? We need to keep in mind the cost component of the business and the income component. And I'm trying to open a pen so I can, and I'm not able to do it today for some reason. Pen is not working. So I think I have to manage without the pen. So trading as a business, so cost component and income components are part of any business. And what are the cost components? First, the computer. You need to have a computer. That's the minimum requirement, that you have a decent computer. You can use your existing laptop or desktop to be able to trade, but this equipment is necessary for trading, because here we are talking about day trading. And you need a decent internet access, which could cost you anywhere from $50, $60 to $100, if not more. So I have taken a midpoint number. Depending on the area region, this $75 will get you a decent speed. And then you need data feed for your trading platform. because this you need real-time data, you need high-speed data, not delayed, not end of day. So real-time data could cost you anywhere from $10 to $100. So again, I have taken a midpoint number here. And then you need a trading platform, which could cost you about $1,000, give or take. Some companies offer a trading platform for monthly subscription of $75, and some offer it for $1,000 for lifetime. So we use a platform that costs us, $1,000 for lifetime. So I have taken that as an example here. And then trading funds, $25,000. Now, this is a big component. If you are in stock trading, especially those who trade stocks, and if they want to do trading, means day trading, brokerage requires them to deposit at least $25,000. If it's $1, 1 penny less than that, the person will not be allowed to day trade. You can buy and hold stock with just $500, but if you want to do round trip trading every day and multiple round trip trading trades every day, you need to have minimum $25,000, and that's why I have taken that number. And then education, trading education, $12,000 I have taken as the cost. And people don't understand the need for education. Everybody thinks that trading could be just like buying to a going to a grocery store and buying any item that they want, and or any retail business where you buy some item from a wholesale store and go and sell it in their retail store in their local area. Trading is not necessarily like that. You need to understand the market condition, you need to understand the direction, you need to understand risk management, trade management. There are a lot of things, unfortunately, which are not taught in schools or colleges. There are private institutions or private companies that offer this kind of education, and in our survey we have seen that education costs you anywhere from $12,000 to the upwards of $50,000. So I have taken the minimum cost that we have seen in the market for decent trading education, without which a person doesn't do trading, they only do gambling. They take trades based on some news feed or friends' recommendation or some social media hype, and they don't know what they are doing, and hope that stock will go up and they'll get profited. But without the education, you will only are gambling away your money. If you have spent enough time and wasted enough money, you might get some education, get some self-learning from the market, but that will be much more costlier than $12,000. Now, last part, trade automation software. Now, if you are planning to do day trading, you need to have some automated software, and that software in our survey costs you anywhere from $500 to $10,000, depending on the bells and whistles of the software. So if we add them all these up, like this, all these costs would be around $40,000 to $50,000. So here, $50,000, and what's the income potential? So income potential, I've taken a rock bottom, number, like $50 per day trading 1 hour. Just now I demonstrated that the software helped us take trades automatically, and in 12 minutes it made us $2,000. With 2 contracts, of course. But if we trade with 1 contract, it will be half of $2,000, which could be about $1,000. So if you see that possibility, you can agree to to the fact that it can make you $50 per day in that 1 hour. If it can make 1,000 in 10 minutes, it can definitely make $50 in 1 hour, right? So this is a rock bottom number I have taken. So let's understand this math now. So $50 per day trading 1 hour could mean $1,000 in a month. because there are 20 days in a month, and 20 times 50 is $1,000 per month. So let's compare these two numbers, $1,000 per month versus $50,000. $1,000 per month is not enough for a living, making a living. And we are talking about making this $50 consistently every day on an average. So but $50,000 you spend one time and $1,000 per month every day. I think if a bank guarantees you this, I think you'll take it any day, because in a year this 1,000 becomes $12,000, $12,000 per year of income for an investment of $50,000. So that's 25% return. So if a bank gives you 25% in return, you will take it, right? Because even if you have to invest in some ETF like S&P 500, SPY, you will get at the best, 8 to 10% in the long run. But here it's 25% is awesome. No one can beat it. So even at this small numerator, we see that this seems like a decent business model, 25% in return. But it's, however, it's like, it's not, you cannot scale it. If you want to make $10,000, you need to bring $500,000 here. The investment has to be $500,000 just to make $10,000. So it's not a scalable business. So then can we consider trading as a business? Not yet. So let's explore the possibilities. Later I will come to this slide and show you how we can reduce the cost component by 90%, meaning we can make it 1/10 of 50K, which is $5,000. We'll show you how to make this cost component less than $5,000. At the same time, increase the income component tenfolds, means $10,000 per month from an investment of $5,000 one time. If we can demonstrate this, if we can achieve it realistically, then trading becomes a business. Then it has all the requirements of a business, which means with a great return with small investment. And this is how a business owner thinks, and this is how a business owner needs to think. So I'll come back to that slide and show you how that's possible. But before that, what do you need to do? You need to learn to trade. You learn to day trade. You need to invest time and some money to this activity, because trading requires skills, because it's complex and there are no guarantees in trading, and there is no guarantees in anything in life. If you want to go to Walmart, if you start from home, there is no guarantee that you would reach Walmart. It's a high probability that you would reach Walmart and come back home, but there is no guarantee. So similarly, trading has no guarantees. It can help you achieve financial independence if you do the right things right way, but there is always elements. So it's not a guaranteed activity, and mostly because traders make some common mistakes. There are standard mistakes that every trader makes again and again, and how to avoid those costly trading mistakes. We can avoid those mistakes by trading only high probability strategies, automating those high probability strategies, and in fact the entire trading process. A very important, trade with other people's money. This is very important, because if you use your own money, your emotions come in the way. Your fear and your greed starts reflecting in your decision making. You hold on to your losses too long and cut your profits too short. But when you use other people's money, your emotions are curbed. You are more practical. You do not get brain fog while you are in a position, and position is going against you or position is making profit, and you make pragmatic decision. So that's why using other people's money is so important. Now, trading during the right market hours. What does it mean? So the market is, there is a good market in the first 1 to 1.5 hours in the morning after market is open, and there is good market, during the close. But now, what about those who have day job? They go to work at 8 or 9 and then come back home at 4, 5, 6. For them, market is, they won't be able to trade during this good market hours. And like investors or swing traders or buy hold traders, they randomly take trades on their mobile phone on the go, at their work and things like that. They sneak peek into what's going on and quickly take trade, but that's not uh, you know trading, and they may not be able to catch the right market hour or the right market price. So what's the solution for that then? So for that reason, we trade in futures. That's the best financial move, especially because futures market is open 23 hours a day and 5.5 days a week. Unlike stock market, which is mostly open for like 7 hours from 8:30 to 3ish in the afternoon. Uh, Futures market is open 23 hours a day. So even if you're busy during the daytime, you can find time in the evening or night, about an hour, and check the market, be able to trade during that market and make a living and earn those $50 to $100 per day that I just showed you in the previous slide. Of course, you'll be aiming for more. It's possible to earn more, but expectation that we have to set in when defining trading as a business is a very small number to see if its business is viable or not. Futures come in a number of contracts, and they're customizable. Unlike shares or stocks, you don't buy or sell in the lots of 100 shares or 1,000 shares. But here we have a deal in contracts, number of contracts, because futures are instruments which are delivered on a future date, on a price, at a price agreed upon today. So that's why it's called contracts. Now, there is a lot of liquidity, lot of participants in futures market, so there is no depth of finding or selling or buying future instrument in the evening hour or night hours, and it's a global market. There are Asian session, London session, all the those sessions are there when future trading happens globally. And with future, you can control a large position, meaning with a small move in the price, you can get benefited, you get profited nicely, which also means that with small movement in price, you may incur big loss as well. So that's why it's important to trade high probability strategies only. Now, futures are diversified across markets and across asset classes. So you will find futures on Asian market, Forex, and S&P 500, NASDAQ, Dow, across asset classes like gold, crude oil, and many more. So it offers a lot of flexibility. And the future instrument symbols are like ES for S&P 500, NQ for NASDAQ, RTY for Russell, YM for Dow 30, CL for crude oil, GC for gold. And these futures are called minis, and there are equivalent micros, which are 1/10 the size of the minis. And the symbol for those are MES, MNQ, M2K, MYM, MCL, MGC. Now, these are the handful of futures instruments that we trade in our business, but there are many more. You can pick and choose whichever you are comfortable. But especially in the beginning, and what we do is we mostly trade ES and NQ, sometimes gold, and there is a Bitcoin futures also called MBT. That's also we are increasingly going to use in future. So this is all you need to understand about futures. These are derivatives. You don't need to understand the mathematical background, the workings of futures. All you need to understand is the symbol and which have the most amount of liquidity and volatility in the market. So uh, rest is anything, everything is like you can treat it like stock instrument. How to get started with futures trading? To be able to trade futures, you need to open a futures trading account. Your broker may or may not be offering futures. And even if if your broker offers, we have to make sure that they offer good amount of leverage, low commissions, and good, execution, that there is no slippage, things like that. So our preferred vendor for this is Ninja Trader. They are, one of the leading futures brokers, and they have a very good trading platform as well. And then you have to access Sliver Bullet Pro software on this trading platform, Ninja Trader, because our software is built for Ninja Trader. And then you practice strategies mentioned in Sliver Trades Academy that we teach. In Sliver Trades Academy, we teach everything about the market, market conditions, trade entry, trade management, risk management, psychology, trading psychology, all that. So you first try to practice strategies. So this is how to get started. The detailed path to success is a 6-step path, and it's part of Sliver Bullet trading system. And the first step is what I shared in the previous slide. Install Sliver Bullet software on Ninja Trader platform. And number 2, practice with automated strategies on a simulated account. The automated strategies are high probability strategies designed for a particular type of market condition. The education on market condition we teach in Sliver Trades Academy. And once you do that, you will help you sign up for a funded trading account. You should not use your own money. There is no one stopping you from, but our recommendation is that you use other people's money. And to get access to other people's money, you need to pass an evaluation. How that evaluation works is you get a evaluation account from a funding provider for a monthly subscription. That monthly subscription is very nominal, anywhere from $20 to about $50 or something per month. You need to trade in that account and achieve certain profit level. Once you achieve that profit level without hitting the stop loss, you have passed that evaluation. So that the software that we have developed will help you take high probability trades. It will help you manage your trades automatically, and which means it will make passing the evaluation easier than you doing it some other way, wherein if you do it manually, you will miss the entries, you will miss you don't know whether it's a high probability strategy or not. If you are losing it, you may not be able to come out for break even and things like that. So it's an assistant. It's an assistant to achieving improved results. Once you pass the evaluation, you can convert your evaluation account to a paid trading account by paying a one-time fee. That one-time fee could be about $150, give or take, per account. And once you have taken the paid trading account, you have to build a loss buffer, what I call it as a loss buffer. Meaning, if you purchase a 25K account, you have to build a loss buffer of $1,500. So once you have made $1,500 in the account, basically you will be doing the same repeating the same step as in step 3, and you will try to build a loss buffer of $1,500 in a 25K account. And once you have built that loss buffer, any profit above that number would be yours to keep. About $1,500, you will keep all the profit. You give 10% cut to the funding provider. because it's their business model. They are looking for good traders, and they want to take a cut from a trader's profit, because they are risking their money. So they're putting their money, so they want to make sure that you pass the evaluation, and they ask for a 10% return, which I think we should not grudge to share, because they have taken all the risk. And once you have obtained one paid trading account, you rinse and repeat step number 3, 4, and 5. These 3 steps you rinse and repeat, and build a portfolio of funded accounts. And this is when the magic happens. You get first paid trading account, then the second one, then the third one. That way you want to build a portfolio of 5 to 10 funded accounts. You can go up to 20 with a particular funded provider, and then you can get funds from different providers. That way you slowly multiply. So this building of a portfolio is same as building a real estate portfolio of a rental property portfolio. You acquire one rental property, put it out for rent. Then the second one, then the third one. That way you build a portfolio of rental properties and collect rent from every rental property. The same way, you acquire multiple paid trading accounts, and you trade across them parallelly, and you multiply your profit. And that's when the magic happens. Your $50 or $100 per hour per day in one account can multiply into $1,000 per day if once you start trading across accounts. Now, how this Sliver Bullet trading system helps in your overall journey? The software part of it can take trades in trending market, reversing market, sideways market, in all kinds of market. For all kinds of market, we have strategies built in. You can automatically scale in and scale out of a position, especially when it's making a loss. And when it's making profit, it can still add to an existing profitable position to give you even bigger profit. So it works 2 ways. It can enhance your profitability, or it will, it will help you come out at break-even price when the price goes against you. And then real-time performance monitoring is possible, because all that you need to watch is one chart on one screen. Of course, we recommend that you get a second monitor if you're, especially when you're trading at home. But when you are on the road, on a beach, and trading from there, assuming you have good internet connection, all you need is a decent laptop. An additional screen will help, but you don't need to, because all the information about the performance of your trading session, number of trades open, number of positions, what account you are trading, realized profits, unrealized profits, everything you can see on the screen in real time. And we provide you assistance in getting funded. We have affiliations with several funding providers. And then we provide complete training and show you with the live demos as well. So that's about the Sliver Bullet trading system. Now, so this is about the system and all that. So, but those who are new to trading, I want to give you some understanding of the market, market condition. Stock market or futures market or any financial market have 2 types of days, or 2 types of activities that goes on with respect to the price in that market. Actually, let me try again if I can grab the pen. Pen is not starting. I like to draw things, but I don't see the pen. It's not starting. Mhm. Oh no, I have the pen here in the second screen. Okay, actually, yeah, here you go. All right, so there are two types of market basically. One is trending market, one is sideways market. So trending market could be uptrending or downtrending, and sideways market could be this. Uptrending market could be this way as well, making swings and going up. And downtrending market could be like this, making swings and going down. And the sideways market could be like this in a very narrow range, completely flat. So let me call this market number 1, 2, 3, 4, 5, and 6. Now, the software can help you trade in any of these markets, but we recommend our traders, especially those who are new, to recognize and avoid trading in market condition number 4. This should be avoided. And this should be avoided because, this is a dangerous market. There's a very little volatility or price movement. It's just staying in one direction. One narrow range, very narrow range. And what happens when anything is flat for extended time? It has to trend in one direction or the other. So before it starts to trend upwards or downwards, it has to break out like this. Suddenly, the price will pop out from the flatness and start going up or going down. And whenever the breakout happens, it often fails. What do I mean by that is, when it breaks out to the upside, say as a trader, you buy here, place a stop loss here, and then since the breakout usually fails, the price reverses, comes down, takes out your stop, and you have incurred a loss. Now you want to sell here or short. You want to short here, place a stop, and the market reverses on you again. And this time it keeps going up and up. And here you have incurred 2 losses. Perhaps half of your daily budget is gone, or more than half, or maybe the entire budget is gone, or maybe your entire portfolio is gone, depending on how much you're carrying and how much risk you have taken in each of these trades. And a trader, feels trigged, and the market keeps going up, and he doesn't have the emotional strength to take any more trades. He gets spooked. He thinks trading is gimmick. It's somebody is manipulating you, and you get disheartened. It impacts you psychologically. If once it happens multiple times, your brain gets formatted, believing that you are not able to get a handle on the situation, and you cannot make money from stock market. So that's why it's good to avoid this kind of condition, and recognize first. First we have to recognize, and then avoid. Recognition is when it's flat for extended period of time. Just wait. And here is the neater diagram where it shows that avoid market condition number 4. And to give you an example of how this market looks, here you can see this in harmless chart, but we have to, if you train our eyes, you'll see that this is the flatness I was talking about, in a very narrow range for extended period of time. And then it broke out. You see a faint wick going up till here. That part was green once, complete green. Market went up from here, and then from there it dropped and became this solid red. So if someone bought here, placed a stop here, the stop was taken out. Now they see, okay, this red bar developing, this short here, place a stop here. Now the market reversed, it took that stop also with it, and it's kept going up from here on. So this is an example of market condition number 4 and why we should avoid it. All right. Now, this is the most important slide of our program, and I will give you a decent understanding of this picture and how you can use it for your own trading if you are already a trader. So pay attention to it. This is the most important slide in this whole presentation, and this will change your trading. This will change the way you look at market, and we call it market DNA. So let me tell you about the basics first. So why we call it DNA first? The reason we call it DNA is because we believe market mimics life. Market has the same characteristics of life because market is made by living people. It's made by people, right? People have emotion and greed, and that emotion and greed shows up. The footprints of emotion and greed shows up in the market as well. So if market mimics life, and life has a basic building block called DNA, then market should also have DNA. So what's the shape of the market's DNA? We know that the human DNA or life DNA, or whether human or plant or animal, the shape of DNA is double helix, right? This is the shape of the DNA of any living being, whether plant or animal or human. So that's the shape of the DNA. Now, then what's the shape of the DNA of the market? So in our quest to understand the market, we figured that the price moves in this fashion. Goes down. This is typically the movement of price. Price never goes in one straight line or one like this. Price makes a move, pulls back, goes up. Comes down, pulls back, goes down. And if we smoothen the movement will look like this. And this is the fundamental shape of price movement. Take any instrument, anytime, anywhere in the world. This is how price moves, the inverted S curve. So we consider this to be the basic fundamental shape of the DNA of the market, or the price movement, and that's why we call it DNA, market DNA. And if we put them together, this is how the price moves. And this how it starts to take shape. The market starts to take shape. Now this is the collection of DNA. Now how to put a structure to it? The human DNA is not enough. Now it needs a skeleton, musculature, all that to acquire a animal shape, or give a shape to an animal or human or plant. So how to put a structure to this price movement? So to put structure to the price movement, we decided to take these two moving averages, 21 SMA and 233 SMA. So these numbers kind of give us the context to give a context to the price movement. So these lines, these two lines, are important. And again, you may ask, why 21 SMA and why 233 SMA? So what's the secret behind this number? 21 and 233 are Fibonacci numbers. Fibonacci numbers are a series of numbers that we observe in nature. the blooming of rose petal or formation of seashells all follow Fibonacci numbers. The ratio of inner petal to the outer petal uh, is based on Fibonacci numbers. So in market also we see this pattern, the Fibonacci numbers repeating, and because of that we have taken 21 and 233 SMA, the two Fibonacci numbers, to provide context to market movement. So once we provide context to market movement, we see that uh, price moves up away from a particular moving average, and then goes back to the moving average. So this is how price goes away and then moves back to 21 SMA. Price moves away and then moves back to 21 SMA. So this you will see everywhere. The moving average 21 SMA moves away from 233 SMA. This is the distance, and then it comes back to 233 SMA, moves away from 21 SMA, and comes back to 233 SMA. So that's the reason we call this 233 SMA the river of life. We like to refer to it using river of life. Why river? River, because river is has water. Um, any water body is important for life. Life and civilizations have risen around a water body, a river, or a stream. Animals come back to river, they move out to graze to the pastures, and they come back to a river or some water body or lake for their watering needs. The same thing we see, price moves away from 233 SMA and comes back to 233 SMA. So it's like magnet, it cannot avoid. And once you understand this behavior, you short here and wait for the price to come down to 233 SMA and benefit from it, or you buy here and wait for price to go back to 233 SMA and exit here and make a good profit. So short here, cover here, or buy here, exit here, sell here, and you repeat this cycle again and again. All your life, rest of your life, you can profit just from this knowledge. So like animal, price has to go back to the meet 233 SMA. Now let me remove all this. Now you can see some numbers on the screen here. All right. Let me place it here. Yeah. So here you see number 1, 2, 3, 4, 5, 6. Where these numbers come from? These numbers come from the 6 market conditions I explained in the previous slide. Sideways market and trending market. So now I want to superimpose those market conditions on this market DNA picture. So market condition number was this: price going up. 2 was price going up, making swings. 3 was the sideways market. 4 was the sideways market with a very narrow range that we should avoid. 5 was downtrending market. 6 was swinging and downtrending market. So now I have mapped those 6 market conditions on this market DNA. So from this, you can, when the market is sideways and starts moving up, you can take trades, long trades. These are called long trades, and profit from this movement. Or you can, same way from the downtrend market, and once the market has turned, you buy here and sell here. And this software has strategies for all these market conditions, right? So still a question remains in this picture, right? That if you have bought here, or maybe if you bought here, you miss this entry here, you miss it. When do you need to exit? How long this market will continue? So you are not sure if you're buying here, 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 or here. When the market has trended enough, when the market is going to make a turn, this is the turn. It's important. Maybe you are bought too late. It's how do you know it's going to make a turn there? How do you know market has fallen enough? Now it's going to make a turn and it's time for you to buy, or will it go down further even? So to get answer to this question, we have to look at nature again. As I said, market mimics life. Life is a natural phenomenon. So again, we have to look at nature, so the way we have organized our, we how the way the societies have organized themselves to get an answer to this question also. Now, uh, so I like to give an example of the highway intersection. This is a clover. You drive on a highway in your car, and you see that almost always at these clovers, you see from distance there are signs for food restaurants, McDonald's or Subway. There are signs for your stay, overnight stay, some motel, or some gas station sign for your fueling needs. So every intersection, especially like this, where there is a clover, will have food or gas or resting areas. And what happens in these intersections? Your vehicle will continue to go further or make a turn through, of course, through the clover. But when you do it, when you if you decide to stop, what happens here? So in these intersections, there is an exchange of money changes hands, and you exchange money for value. Value could be in terms of gas, motel, or food, right? So heavy exchange happens in these intersections. So here, when the market is about to make a turn, there is a heavy exchange that takes place. In these turns, exchange takes place. So if you see, same as market condition number 3, repeats at these intersections, number 3. And that's the indication for you that the market is going to make a turn, and you are ready to take a short position here or a long position here. And then things happen like magic. Price has to go and meet the river of life for its watering needs, and you profit from this direction. So just apply this knowledge to your trading from tomorrow, from Monday, and you will see you will start profiting. If you have been making losses, if you have been a successful trader already, this additional piece of information will make your trading very powerful, even more profitable. So again, everything that we have talked about in this picture is based on our understanding of life, our understanding of the societal structure, what happens in an intersection, what happens when things are exchanged. When things are exchanged, they are in a balance. This is a balanced state. You cannot overprice a McDonald's burger. You cannot overprice a gas. It has to find a balance between demand and supply. So in these locations, number 3, the demand and supply is in a balance. They are if the price is running away, it's creating some kind of imbalance. When market is at one level, there is a balance between supply and demand, and the price goes back to a bigger moving average just to balance itself out. If it has run away from it, it created imbalance. If it moves back to it, It means it's averaging itself out to balance the supply demand voids that it created in the first place. So this is the logic behind all this. Now we go into deeper levels and help our traders understand what kind of trades to take in these market conditions. Those are advanced stuff. So if you join our program, you get to learn all that. But just with this knowledge today, you should be able to improve your trading, even if you don't join our program. Now, this is a neater diagram for you to understand, and feel free to take a screenshot or a picture and keep it as a reference for yourself. This is this is another version of the same picture. Now, to give you an example of the DNA using a real-time picture, this is a NASDAQ 30-second chart, and here you see the green line. This green line here, this is basically 21 SMA, and this red line that you see here, this is 233 SMA. So market went up and then it became sideways. Here you see this was market condition number 1, this is market condition number 3, sideways, and it went and touched 233 SMA here. Big drop here, and then it went and touched. So even if you captured this move down to 233 SMA, or this move down here, this is about 18,000 to 20, say roughly 20 points. 20 points, if you capture this, 20 points are worth $400. 400. This small drop, because you now have the knowledge that okay, market has risen, it's sideways, it has to come and meet 233 SMA. Short here or here or here at the drop, give or take, you'll make about $400 in this move alone. If the drop is bigger, definitely, here you see this 233 SMA is slanting. In the previous presentation, I showed that 233 SMA was flat. I discussed basically the shape of the DNA. I did not talk about the orientation of the DNA. DNA could be like this as well, slanting. So here this 233 SMA is slanting. There's a small movement that you captured, and you need high probability, predictable, assured moves. So this is one of those assured moves that you won't go wrong. And if you know where to find this $400 every day, every hour, that's all you need to live off it for rest of your life. So, and then from here, market could become sideways again and things like that. So this is an example of how we apply market DNA on real-time charts. Now, revolutionizing your trading experience. At this moment, I normally do a demo. I used to give a demo of the software, but since I started to give demo in the beginning itself these days, so what I'm going to do is use this slot, maybe 5 minutes. I will give you a demo once again. So here you see I will reload this and what I'm going to do is I'll just continue from here itself. I will refresh. Okay. So say here I'm going to continue. I reset the session, again it will start. Here I'm going to use a different strategy. Now the market has trended a bit, and I'm not sure if it's going to continue to trend, though it looks like, but I want to be safe. So there is a safer a strategy here, which I call a contrarian strategy, which is safer, when I don't know the direction, and especially, market is sideways, we apply, contrarian strategy. I will apply that, and I'll still plan to be long, and just so I can be safe, and I will see if it can get me make me some additional money. So as you see, it started to trade, and couple of good trades it took, and about $500 in about, it started at I think 42, I think 842, and it's about 12 minutes. 12 minutes, it's $526. So, and now the market is becoming sideways, so I need to be safe. So maybe one more trade I will take, and then market is still running away actually. So
target order filled. Target filled.
So I'm going to basically, I wanted to give you an idea of how this it works. So $569, so initially we made like $2,000. Now $569, about $25 of profit. And again, I want to emphasize that this is not how we recommend you trade. You need to apply market condition knowledge. Be selective about your trading. Don't expect $2,500 every day. It's safe to expect $500, but your business model should be based on making about $100 every day consistently per account, so that when you scale up, you can trade across multiple accounts and multiply profits that way, than milking one particular account for the maximum benefit. So it's approach has to be a conservative approach. That's the point here. So now you have seen the demo, and now let's get back to this slide where we discussed trading as a business. And I would say that oops, here if we eliminate the cost of data feed and trading platform, trading funds, education, and software, and bring the whole cost under $5,000 one time, and look at the income as at $50 per day, it looks $1,000 per month. Now I hope after looking at the demo of the software, you can up your expectation from this trading business to $100 per day. I hope you can safely upgrade your expectation, which means $2,000 per month. $2,000 per month. So $5K investment and $2K per month, then it's like 40% return every month, and then we are talking decent number. At least $2,000 you can pay half of your mortgage, or car payments for 2 luxury cars, per month. But if you have, imagine if you do it across 10 accounts or 5 accounts. 5 accounts if we do, it is $10,000, 10K per month. And if you do it across 10 accounts, 10 paid accounts, it is $20,000 per month, or $240,000 per year. Now we are talking about big numbers, a scalable business, even with small profit per account per day. Numbers multiply. So goal is to acquire one paid trading account, and over a year scale it to 5 to 10 trading accounts. So that's a systematic. This is a systematic approach to building a scalable business. So here is another slide. So one time $5,000 and trade across 10 accounts to get 10K per month. So how to achieve that? So this is an example of trading parallelly across multiple accounts. This example from one of our trading days. We aspire for small profits across accounts. So, and these numbers are sorted, in increasing size. So, uh, uh, ignore the small numbers or the large numbers. Take the numbers in the middle, about $100 per account, and this is what one needs to aim for, on an average. And if you have multiple accounts, your profit multiplies. And some days are not, market is not behaving the way we could be comfortable. So those days we test trade with smaller number of accounts. Here we see we on certain accounts there are only some under $50, and certain accounts there is more as well. But we manage our risk depending on the market condition and account size and all that. So there are two examples that I just shared. Now, the software that I gave you a demo of works this way. It basically helps you or serves the purpose of training wheels to a bicycle or the guide rails in a bowling alley. It keeps you safe. It keeps you prevents you from making losses. It helps you trade high probability strategies. Even with training wheels, you could fall if the child is not riding properly, if it goes into wrong type of streets, with potholes and all. But the point here is, it tries to keep you safe and stay in the lane as much as possible. That's how the software works. Now, these are something you receive from funding provider. Once you pass an evaluation, you receive a certificate that you passed the evaluation. You are ready to upgrade your account to a paid trading account. You pay $150 one time, which covers basically the data fee and all sorts of fee, administrative fee, and their maybe technology fee, all that. So that's one time, and then you keep that account until as long as you can, without blowing up, without hitting the stop loss. So these kind of certificates they provide, and these are all the certificates that we received from our funding providers for our own trading that we do within the company. And June, July here, and now we have slowed down because we have other paid trading accounts. We do not focus on evaluation too much. This was 250K account. This was the largest account that we passed. And there is one more which I missed, which we passed last week. So so those kind of certificates you receive from them. This is just for ornamental. There is no special, it just gives you a pat on your back that you have achieved something. Because it's an act of discipline, it requires discipline. So it's good to have those certificates that you followed discipline. Now the decision time. The question is it right for you? Is Sliver Bullet trading system right for you? Whatever I have talked about is right for you. So it's not right for you if you have a safe job for life, because you have safe job for life. You don't need to work even 1 hour extra on stock market trading, futures market, for any extra income, because your job perhaps is safe and gives you enough decent income. And you don't need this system if you have a source of huge passive income. If you have inheritance, endowments, income generating properties, you don't need another source perhaps, and you don't need Sliver Bullet trading system. And you don't need it if you are happy with your current financial situation and your future situation as well. Um, because happiness is a state of mind. Money can help you some extent, but money doesn't get you happiness. So if you're happy with your current situation, of course, you don't have to go for it. But you definitely need Sliver Bullet trading system if you want to control your financial future by spending only 60 to 90 minutes a day. 60 to 90 minutes a day. So now, what are your options? You have listened to all this, and you can still drop it because trading is not meant for everybody. Everybody has to get some kick out of it and be happy doing it. And maybe you get happiness doing something else, so you can drop it. If you want to be a chef, you want to cook a nice meal and open a restaurant, that could be another passion, and you don't have to do trading. You can drop it. Or if you are interested, you can delay it. You can say to yourself, you are busy, you have other things, commitment, this and that. Whatever excuses you can come up with, you can delay it. And trust me, not a great option, because if you are here in this webinar, you have already delayed. You haven't learned trading the proper way. You do not have tools for trading. You do not have system for trading. You have already delayed it. If you delay any further, you will delay your financial freedom even more. You can figure it out yourself. We are all smart people. We have, most of us have, good education. You are able to access, attend this webinar. From that only, I can imagine that you have some background. You have made some money, meaning you have attended perhaps a college or did some higher education as well. And you are smart. You can figure it out yourself. But trust me, it took us almost a decade to figure out, and last 5 years to perfect it, develop the software, develop the business model around it. So we may not be the smartest, but we spend time to figure it out yourself. And anybody cannot figure it out themselves overnight, even in a year, even in 2. It takes at least 3 years to figure all this out. And not just the time, but you have to spend a lot of money, give a lot of money to the market before the reality hits hard in your head and you get to understand the market. So not a great option. Figuring out yourself, definitely you can make use of the guidance that we provide. You can opt for some other trading program. There are tons of programs out there in the market, but we haven't seen any program that offers 3 things in one place in an affordable price. The 3 things are the market education, trading education. Second is the trading software, where we have a software with multiple strategies and a lot of features. And then the funding. All 3 in one place, we haven't seen anywhere yet. So and that to the price that we offer, which I'm going to show in the coming slides, is unbeatable. So the going for somebody else's program may not be worth researching or looking into. Or you can go for Sliver Bullet trading system if you are convinced. If it's is the meeting that you are attending the second or third time, thanks for joining back. But if it's the first time, feel free to call us, ask any questions that you have, or come back again to attend this training. Or this training will be on YouTube, actually. You can look for Sliver Bullet trading system on YouTube and check this presentation, rewatch it, and understand what was discussed. So this is the retail price before any discounts. This comes in 2 flavors, pro version and light version. Comes with training and support. But we are offering a discount of 30% on Sliver Bullet Pro. All our customers have purchased Pro version. Light version is a cut down version of it, and so 30% discount is what we offer, and which brings the cost down to under $5,000. So as I promised in the business model, I'll show you how to bring the whole cost down to under $5,000. This is how, if you take this program, you don't need you don't need to spend money on any other trading education. You don't need data fee. Your funding provider will provide the accounts which comes with data fees. You don't need trading capital. The funded account provides the capital. You don't need to go for anything else other than having just a laptop. So this is the price, and then you get access to Sliver Trades Academy, and which is a weekly group training and support via email, especially first 2 months, and after that, by that time you should be able to figure out. So now this is the website. If you decide to purchase, slivertrades.com, and here you come down, click on software, and here you will purchase this Sliver Bullet Pro. Click on buy now, and here opens this page, and you click on agreement. I request everyone to read this agreement, like 4 or 5 page agreement, because this software is licensed for one computer for life, and we need to capture, license is tied to your machine ID, and so some information is there in the agreement. So you should read it, and then add to cart. And once you add to cart, you check out. You can check out as a guest. You don't need to sign up, and you enter the code launch 30 here, and if you apply, you get a discounted price of $4,200, and you proceed with checkout using your credit card or PayPal or something. Once you make purchase, you receive a welcome email, and you will get access to Sliver Trades Academy. Here we have lessons, documents, lessons, and training videos. You get access to all that, and you watch all those videos in offline, but we have online training sessions as well, for which we will send a schedule. So this access to this academy you get for 3 months, and that's all perhaps you would need. And from time to time we give special sessions, like a demo sessions, some real live tradings during live trading market. Also, we sometimes do demos, and there are some videos, live trading videos also on YouTube. You can go and watch. So since you have attended the webinar, we want to offer our promo, a special promo, which we call Sliver Lining promo, valid till tomorrow. So as part of this promo, we'll give for free a 50K evaluation account. The first month subscription we will pay, so that you don't have to worry about anything else. And if you want additional accounts, you can always buy from them directly. Of course, we will provide you our affiliate coupon, affiliate code to get a better discount. This 50K evaluation account gives you $2,500 in drawdown, and you will pass this evaluation if you are positive $3,000. So this is the and once you pass the evaluation, you upgrade this account to a paid trading account. Build a loss buffer of $2,500 in that, and any profit above $2,500 will be yours to keep, minus 10% of commissions to the funding provider. We are developing Bitcoin trading strategies. We will launch it around maybe after Thanksgiving, and we will we are going to offer around $1,500, but it will be free for you if you sign up by tomorrow. So Bitcoin trading strategy. And to start your journey, as I showed, you will go to slivertrades.com, enter the discount code launch30, and get the software and join the program. But special promo we are offering, that's for today only, 40% off instead of 30%, and the total cost comes to $3,600, so that in the $5,000 budget you have money left to buy an upgraded computer for your trading. So everything we are trying to keep it within $5,000, so $3,600 you pay to us for the program, and it's your choice whether you want to upgrade your laptop or computer or whatever. So still there is some money left for you. So if you have any questions, feel free to ask on the Q&A box. I will answer them one by one, or call us at this number, messages 331-255-3656, or you can call us also, or email us at info@slivertrades.com. So for this, to get this price, you have to contact us, email us, or SMS us to get the special coupon code for this price, because we don't show it here, we don't make it public. Only to the webinar attendees. Upon request, we provide that code. So message us for the special code if you are interested. So I will take questions one by one, so feel free to ask. So question is about the two versions. Yeah, so light version and pro version, there's two versions available, but we are offering pro version at the same price as light version, so it should be no-brainer for you to think about light version. So light version has only one ATM, one trading strategy, manual scaling, no automated scaling, defensive mode only, no aggressive mode, and there are different features. We explain all these features in our training as well as the Sliver Trades Academy. That's the difference between pro and installment. No, we are not offering an installment, but in case, special cases, we have agreed to it. We don't offer it. So if you are interested, message us, call us, and we can, consider your request depending on case-to-case basis. But we have brought the cost so down, so we can, people can buy, by paying full. Installment could cost you slightly higher than this number. The market DNA structure question is about the market DNA. Where is market DNA? Yeah. So this is our understanding. This, does it behave all the time like this? Well, to answer this question, I would say there is no guarantee to anything in life, but it's like gravity, right? If something goes up, it will come down. It has to come down, right? The 233 line acts like a magnet. Now, can a price escape from 233 line forever? It cannot. Of course, there is something called escape velocity. Things will go up. If you throw certain things at certain speed, it will leave Earth's gravitational range, and then it will go into this space. So price, can it go skyrocket and never come back? Yeah, it could happen. It could happen. It will never come back. But thing is, 233 SMA in that case becomes slanted. It will go slanted like this, and at some point 233 and the current price will touch, because price can never go up or never go down. It can go down to zero, and go down to zero means 233 SMA has also become zero at that time. So that way it collapses. big collapse, instead of a price moving to an average, the two things collapse. That uh, could happen in extreme case, like stock price going to becoming zero, or suddenly something becoming so expensive that it's out of the reach from common people, and that time this SMS collapse. So those are extreme, those theoretically possible. It's not that it's in practical, day-to-day market, we don't see such things. um, yeah, there are gap ups, gap downs, but eventually, prices come back to average itself. And all we need to do is that capture a small movement, where it's absolutely assured. Not to say that you cannot trade in these areas. You can definitely, it's a nice trending market you should capture. But once, you'll start to see the pattern that, okay, the movement is slowing down, the angles are becoming less sharp, and that's the time you should become defensive or stop trading, or wait for a range to form before taking or changing strategies. So one strategy doesn't work all the time. It works only in certain market condition. Once that market condition is over, that strategy is not going to work anymore. You have to change the strategy, and all that comes with the education that we provide. We teach all that. So I don't see any other questions. So I will leave my contact details on for a couple of minutes. Thank you very much for joining today. Uh, it's nice to have uh, people join and ask questions and show interest in trading, uh, and uh, and in our program. And I wish you all have a great weekend and Halloween ahead. Our goal is to make trading less spooky this Halloween season, so so that a market doesn't trick you, but gives you profit. Thank you very much for joining. Bye now.